Hello, everyone, and welcome to today's webinar, Financial Supports PPP Loans for Childcare Providers. Before we get started, I'd like to go over a few items so you know how to participate in today's event. When you joined today's webinar, you selected to join either by phone call or computer audio. For any reason you would like to change your selection, you can do so by accessing your audio pane in the control panel. This webinar is being recorded. All participants are placed on mute for quality assurance. You'll have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. You may send in your questions at any time. We'll collect these and address them during the live Q&A session throughout and at the end of today's presentation. I would now like to turn it over to Kathy Glazer, President of the Virginia Early Childhood Foundation. Kathy, the floor is yours.
Thanks so much, Stephanie. And if you would move us to the agenda slide, that would be terrific. Great to have all of you with us today. We really appreciate your spending some time with us and are very pleased to be able to bring some important information to you about the opportunity to apply for the Paycheck Protection Plan loan and grant program. We're very fortunate to have two experts with us today who know all the ins and outs about eligibility and facilitation of application and connections to lenders, et cetera. And very glad also to have, we hope, on the line a special guest, First Lady Pamela Northam, to start us off with some opening comments. Let me just check and see if she has been able to join. Sounds like she has not been able to connect with us yet. I think she's traveling, so we'll give her another minute and we may loop back and try to hear her comments of thanks and encouragement to our fabulous childcare providers. I want to go ahead and introduce our speakers today. Mike Austin with the Small Business Development Center of Hampton Roads, and Gary Ripman, CEO of Civitas Strategies. Gary is based in Massachusetts, but he was a Hokie and is always a Hokie, so he definitely understands and has some Virginia roots. And with that, I think I'll turn it over to Mike to get us started. Thank you.
Thank you to everyone who's joined today. We are going to focus on the Paycheck Protection Program as indicated. And I first want to let you know about, let's see, the first slide is about the Paycheck Protection Program. There we go. And that briefly shows at the bottom of the slide who our sponsors are. The Virginia SBDC Network is sponsored in part through George Mason University, and we receive a good portion of our funding from the U.S. Small Business Administration. We are a network of not-for-profit organizations throughout the state. And the next slide kind of gives a graphic of where we're located. We are a statewide organization, and we're also part of a nationwide organization of SBDCs throughout the country. In Virginia, there are 26 separate locations available for small business owners to contact any member of our organization. Again, we are not for profit, and most of our services are at no cost to the business owner. So that's briefly about the SBDC network. I think Gary now wants to talk about his organization.
So next slide. Yeah. So my organization is Civitas Strategies. We have partnered with Nielsen Training and Consulting to provide PPP technical support through homegrown childcare, which is a national organization, consortium of funders who are totally focused on advancing home-based childcare. And so they have been kind enough to invest in some technical assistance that is open nationally. And so we will cover that a bit later.
Okay, next slide. this kind of covers our agenda for the session this afternoon. I told you a little bit about the Small Business Development Center network in Virginia. In addition to the 26 centers, we have a group of between 70 and 80 different advisors throughout the state, of which I am one. And a lot of us are generalists, but some of us have specific backgrounds that lend themselves well to assisting small businesses. My background is I'm a retired banker, having spent almost 40 years lending money to small businesses throughout Virginia, primarily in Hampton Roads. And more than 20 years of that time was spent working with the various small business administration loan programs, 7A, et cetera. And so when the COVID crisis came, I was asked to start working more on a regular basis with small business owners like yourselves that were really struggling with which loan program made sense. Did any loan program make sense? Should you apply for one of these unique new programs, et cetera? So I do spend a lot of time every day working with other counselors around the state, as well as directly with clients, trying to give them unbiased information and guidance on what makes the most sense for them to help keep their businesses operational. So we're gonna,
Mike,
yes.
I'm sorry, I want to interrupt you for just a moment. I think we have the First Lady on the line, and I just want to give her the opportunity to share a few comments.
Okay.
First Lady? Oh dear, we're having so much trouble with the connection. She's on the road, and so I think it's just we're having a little bit of a hard time getting her linked up. She can hear us, but unfortunately we can't hear you, First Lady. I'm going to let you continue on, Mike, but I know that the First Lady would have wanted to share her thanks and encouragement to all of our providers, letting you know how much your service and care and education for our young children means to her and the governor. Certainly can't speak for her, but I know that that's the tone of her message that she would have loved to have delivered to you personally today. With that, Mike, excuse me for the interruption, and please go ahead.
That's fine. Not a problem at all. And if she happens to be able to join us, please let me know and we'll stop and she can interject her comments.
Thank you.
We're going to talk, briefly about the history of the PPP program, or as the SBA refers to it as P3. I'm going to go over the general terms and conditions. Another thing that we really want to focus on is, does the PPP make sense for you, and are you even eligible for it? There's some kind of quirky requirements in the language of the SOP from the SBA that kind of floors a lot of people when they start looking at whether or not they're even eligible. We're going to do a quick review of the application form, review the documents that are required so you don't have sticker shock, if you will, when you start talking to a lender about the process. And the main thing we really want to do is open this up to questions. We want to make sure that everybody gets something to value out of this presentation. So don't be bashful. Use the text system that we have here to ask any questions. There are no dumb questions except the ones that aren't asked. So please keep that in mind. So let's go to the next slide then. Keep in mind from the very start, the PPP program it was set up in an extremely short amount of time from an SBA perspective. In my experience with the SBA, it usually takes anywhere from 6 to 12 months for them to roll out a new loan program. There's a lot of vetting, there's a lot of input from lenders, borrowers, et cetera. The PPP went from nothing to a issued program, if you will, within 7 to 10 days after initiation, after Congress approved the language for the for the program, and the president signed it. Unfortunately, there were some issues with the first rollout that caused some problems because it was rolled out so quickly. But keep in mind a couple of things. From the very start, it was assumed or believed that the COVID crisis would be short in nature. That means a lot of the language and the structure of this program was based on maybe a 2 to 3 month hiccup, and then life would return to normal. Unfortunately, that is proven not to be the case, but still a lot of those initial guidelines are still in place. The main goal, there are two main goals. The first one is to retain employees at comparable wage levels to their pre-COVID level of income. So the main goal, again, is to keep employees on your payroll and pay them what they were receiving prior to COVID. And then a secondary goal was to provide funds for other basic operating expenses. And that's why you see initially the requirement was 75% of the proceeds had to be used for payroll related expenses. It's been later as of June 5th, reduced to 60%. So right now, 60% is supposed to be used for payroll, like salaries, wages, overhead for payroll, like group health insurance, paid sick leave, state unemployment, taxes, things like that. And then 40% could be used for other operational expenses. This includes rent, utilities. One of the weird things, you can't pay the principal on a mortgage, but you can pay the interest on the mortgage with this program, and any other interest on other debts that were in place as of 2/15/2020. The 2/15 date you'll see in a lot of the documentation requirements. That's the date that Congress selected as the date you need to be in operation. If you're in operation after, you didn't start till after that date, then by the policy guidelines, you're not eligible for PPP funding. So that's another critical date. And you'll see in the application process that a lot of the documentation requires you to be able to show you were in operation on that date. So let's move to the next slide real quickly. One thing to keep in mind is that PPP loans are offered by banks and other lenders, including fintech firms. If you're not familiar with what a fintech is, it's a financial technology firm. It's a lending platform that is totally online. There's no sticks and bricks. There's no local branch to go to. I guess PayPal is one of the most well-known fintech firms. They provide a variety of services for small businesses, and yet you can't go to a local PayPal office. They just don't exist. So as we go through the slide, I think there's some more features here. Yeah, you only get one loan per borrower. If you want to just keep clicking on them and put them all up there, that would be great. You only get one bite of the apple, so to speak. You get access to one PPP loan at this time. There is some talk within Congress that they may make some exceptions to this with another round of funding, but at this time, you only get one PPP loan. Personal credit can be an issue. You'll see in the application that it asks if you have had a bankruptcy, a recent bankruptcy, or are currently in a bankruptcy situation. That could disqualify you for receiving a PPP loan. I've had some small businesses, particularly in Hampton Roads, that had that very issue, and they were deemed ineligible for financing. Another thing to keep in mind is you have, under the new rules as of June 5th, you have 24 weeks or until the end of the calendar year to spend your proceeds. And the biggest thing, the most unique feature of this, and in my almost 40 years of lending money, I've never seen this with any loan program, is they've built in the ability to have some or all of the loan forgiven. So it would in effect become a grant, and none of it would be repayable. And that's a topic of further discussion at a later time, but most businesses that get the PPP loan do so with the idea that they're going to try to maximize their forgiveness. Another factor to think about is you've got to maintain separate record keeping. This means if you run your books through a personal account or you commingle your business and your personal obligations and income, it can really become an issue when you ask for forgiveness under the PPP program. So if you get a PPP loan, we recommend to all borrowers that they set up a separate account just for the proceeds of that of the PPP, so you can easily show to your lender at the time of forgiveness that you have spent the money in a way that conforms to the forgiveness requirements. Also, you've got to maintain bank statements, payroll records, 941 tax filings. You've got to have this up front and also at the time you ask for forgiveness. So there is some additional record keeping that's right now not an automatic process for the debt to be forgiven. Now there is, again, Congress is looking into the possibility of drawing a line in the sand, so to speak. And if your loan is $150,000 or less, you may just have to provide a certificate saying that, hey, bank, SBA, I use the money as intended. And then that's all you'd have to file. That has not yet become law, but it is being discussed when Congress comes back into session later this month. Let's see the next slide. If you can click on all of them. I don't know why it's not showing all of them. The main thing you want to look at is payroll cost variables include things such as the legal structure of your business and how the business taxes are paid. That's really important because there's different requirements that we'll briefly go through later that vary depending on the way you file your taxes with the federal government. Things like whether or not you're a sole proprietor with or without employees, if you're an LLC, and you file as a sub S, if you're a sub S corporation, if you're C corporation, or if you're not a not-for-profit, those all can impact the type of documentation you need to provide upfront and at forgiveness time, and also can impact how much money you may receive under the PPP. The number of your W-2 employees is also important. We've had a lot of issues throughout our system with borrowers that have a lot of independent contractors rather than employees. And I know Gary's going to touch on that in his presentation, but you need to look at that up front because that is another thing that will have a big impact on how much money you get. If you work with independent contractors, they independently can get their own PPP loan, but you cannot count them as your W-2 employees. Also keep in mind if you pay any other benefits, including health insurance, retirement contributions, etc., and even severance payments, these can all count towards the amount of payroll related expenses that you're eligible for to receive under the PPP program. And I mentioned already the date the business started and or any other income that the business gets. That's again where this February 15th date is so important. Another thing, and maybe for a lot of you this seems kind of strange right now, but they've put a cap on employee wages at $100,000 prorated for the term of the PPP loan. So we won't spend a lot of time on that, but that's just another quirky thing that's in this program. Things that can also affect the maximum amount that you'll receive under the PPP is keep in mind that if you're an owner and you're taking draws on which there's no tax paid, that doesn't count as payroll. Also, dividends that are paid to shareholders don't count as payroll. So you've got to really look closely at the way you've been filing your taxes, and the period that everybody's looking at, including the SBA, is your 2019 taxes. And keep in mind, even if you haven't filed them yet, you're going to need to complete your 2019 taxes prior to submitting the request to your bank or whoever you're dealing with on the lender side, because that's the critical period of time from which a lot of this documentation and numbers are going to be obtained. So let's see. I think Gary's going to talk about the next slide.
So some other key points to think about, right? And this is just to reinforce everything that you've heard Mike talking about. It's limited use, right? So we're talking about payroll within the proportions that Mike mentioned. You have to use at least 60% of the money on payroll, and you could use it for rent, utilities, and mortgage interest. So for example, some of the providers that we've worked with have said, well, I have a high interest credit card. Can I use that? You cannot use the funds for that. There's no collateral or personal guarantee required. So the federal government is saying, we are going to guarantee this loan on your behalf. The banks may ask about credit. As Mike mentioned, if you are currently in a bankruptcy, if you have had an issue with a federal loan in the past 7 years, excuse me, those could be issues. But a lot of times they will ask you for permission to do a very high level credit check. They're just verifying who you are. So, if you have, let's say, poor personal credit for reasons not related to a bankruptcy or defaulting on a federal loan in the past 7 years, it should not be an issue. Payments are deferred until after the forgiveness period. So what's going to happen is, as Mike mentioned, you get the loan, and then there's a period where you have forgiveness. We'll talk more about that later in the presentation. And then once that forgiveness occurs, if there's any money left, that becomes a 1% fixed interest rate loan. And that would, the payments for it wouldn't begin until after the forgiveness determination is made. And to be clear, if you are left after the forgiveness period with any loan, and we'll talk a bit about this, but it's becoming, with some of the recent changes, very, very likely that you will not have any money that isn't forgiven. But if you do, you can repay that loan at any time without prepayment penalties or fees. So, if at the end of this you do end up with any debt, which again is a lower probability event at this point, you can return it and get out of that debt. Next slide. So we're going to go through and talk about each different type of business, but we want to start with sole proprietors and independent contractors. And on the side, we've been having a number of conversations and questions that have come up. The PPP is for you, right? To be clear, you are a business. If you are a sole proprietorship or an independent contractor, so if you, on your annual taxes, you write down your business income, you're not a corporation, you're not a nonprofit, but you include your business income, which appears on a Schedule C, is what it's called, in your personal taxes, then you're a sole proprietor. You count. If you are a 1099 independent contractor, you count. So to be clear, part of our background is my firm in Nielsen Consulting has been working with a number of providers in New Jersey, just like you. And I would say about half the providers we worked with have been sole proprietors or independent contractors. So this is really happening. They're really getting money from this program. It really does work. And to be clear, if you're that owner director, let's say, of a home-based childcare, and let's say you have one contractor working for you, a 1099 contractor, you can apply, they can apply separately, but you can both apply. So do know that there is that opportunity. If they're a W-2 employee, Mike will talk a bit more about some of the work with W-2s, but you would include them with your application. But if they're a contractor, they're separate. The other thing I should say real quick, as we're talking about sole proprietors and independent contractors, if it is somebody who is on a cash payroll, you cannot report them for this. And so just to make that clear that, because we do sometimes have people where they say, I pay the person in cash, this is not the place to report them. So with that, if let's move to the next slide. Mike, are you?
All right.
Okay.
I forgot to unmute myself. Okay. We've talked briefly about sole proprietors and independent contractors. We're now going to move on to some of the other legal structures and tax filing entities that you may be operating with. The IRS provides small business owners a lot of different options for filing for their taxes, and a lot of attorneys recommend that centers that maybe aren't home-based but are smaller on scale but operate in a commercial business or a similar situation consider creating a legal structure, and the LLC or limited liability company is one of the more commonly used legal structures that a lot of people turn to. One thing to keep in mind right off the bat is the SBA has placed certain limits on the money that you can count towards your PPP. And this is one of the areas a lot of limited liability companies run into is your payroll costs will be the earnings on which you are taxed. And you'll see that common language throughout all these different legal structures is the SBA is saying, what earnings are you taxed on? Because under the LLC structure, your owner draws and are not included, but the net profit is, because you're going to be taxed on that, even if you use a different IRS eligible structure, such as a sub-S division. Under LLC status, you can file your taxes under a couple of different, in a couple of different ways. You've also got to make sure that you omit all draws. And it's really important to do this math early before you actually apply, because if the amount that you are filing against from your 2019 taxes show 0 or less, you're not going to get any money through the PPP program. So you've got to take a look at that really closely. And the way you look at that is you look at your, as I said, your 2019 tax return, your schedule K1, and look at line 14 to find the information that relates to how much you might be eligible for under PPP. Now, if you have employees, because LLCs can be single member LLCs without employees or LLCs with employees, what you're going to need to provide in the way of math is you've got to look at their W-2 information or use your quarterly 941 filings to pull together the math, if you will, for the as the supporting documents to show that you are eligible for a certain amount under the PPP. It's also really important that you look not only at your legal structure, but how you file this information with the IRS. Because I said earlier, an LLC can file their taxes under a couple of different ways. They can file as an LLC, they can file as a partnership, or a sub-S corporation. So just make sure that's consistent as well. If not, it can really have a negative impact on your ability to get PPP funding. So the next slide. Next slide is about shows partnerships. There we go. What you want to do with a partnership is calculate each partner's salary. Some partnerships are single members, some have multiple members. Again, you've got to take a look at that $100,000 cap on a prorated basis. again, you look at your 2019 tax return, the K1 filing, which shows your distributions to your partners, and you look at line 14A. And then you take the total partner income and multiply it by a factor of, as you see here, 0.9235. Then you add in the gross wages and tips. And this is interesting. You can actually include tip income for your employees as part of your PPP amount. And then you also look at line 18 on your 1065 filing, which is the filing for a partnership. And that's the number that you can add in for payroll related overhead. Also look at your state and local payroll taxes for 2019 and include those in your number. And then as far as calculating, you just look at the same formula that any other business would for a sole proprietor with employees. It's a 3-step math process that you can find in the application itself. The next slide shows S corporations. Keep in mind with an S corporation, this is one reason why a lot of businesses choose this structure. The business's profits or losses flow through the stockholders, and that income or loss is reported on their personal tax returns. And the second point is really important, that if the S corporation does not pay salaries through payroll and therefore does not pay employment taxes, your business would not be eligible for a PPP loan, because again, they're looking at taxable income. And if, depending on how your S corporation handles its finances, that could be a major consideration. Also, shareholder distributions aren't considered payroll, so they can't be included in the calculation as well. So again, it goes back to using your 2019 tax return. Again, you need to compile it even if you haven't filed it yet. And hopefully when you file it, it pretty well matches what you have compiled. But that's the magic period you want to use. And for all W-2 employees, be sure you include their wages, commissions, tips, payroll taxes. Any of that can be included in your PPP amount. And LLCs that follow this, that file as an S corporation, which again, they do have the ability to do, should follow these guidelines. The next entity we're going to touch on real briefly is in the next slide, we show a C corporation. C corporations have been around forever, it seems like. Owners are considered employees. You've also got, one thing you got to be careful of is that dividends and loans to shareholders can't not be included in your PPP eligible costs. So that's something that you've got to look at. The saying in owner draws are considered a loan that need to be repaid at some point in time, which is why they can't be included. But again, back to the S corporation and the other legal structures, W-2 employees should be included, and make sure you capture all their related overhead to make sure that you get the full amount under your PPP. And what you look at is your 2019 tax return, 940, and you pull in your payroll for 2019 to confirm all this through your filing of your 941s on a quarterly basis. Now, the last slide we're going to get into with different legal structures is on the next slide is a not-for-profit. Historically, if you came to me when I was lending money, you said, I've got a not-for-profit that wants to get an SBA loan, I'd say, thanks for coming in. Here's a pencil with our bank name on it. Sorry, we can't help you, because not-for-profits are typically not eligible for SBA financing. But one of the unique features of the CARES Act related loan programs, that is, the PPP and the EIDL program, that not-for-profit agencies that file a 990 tax filing, they are eligible for financing. So that's why you see, if you look at the list of PPP recipients, you see churches, not-for-profit agencies, Girl Scouts. I mean, it runs the gamut of not-for-profits, which is pretty, again, unique. Now, what you need to do as a not-for-profit is you've got to look at your 2019 quarterly 940 or 941 filings to gather your payroll tax reports. Look at your 1099s for 2019, and also your lender may require additional information for January and February of 2020. So keep that in mind as well. Another thing you have to provide is your the IRS 990 form. And in addition, the articles of incorporation, your bylaws, which you'd have to do for the other legal structures other than a proprietorship, et cetera. And the main thing is, just like for any for-profit entity, you need to pull together all of the payroll reports that you can show to your lender to capture all of the funds, that all of the use of proceeds that are eligible for the PPP program. So that covers the legal structures. The next slide looks at, okay, you've kind of gone through all this and you say, yeah, I want to get a PPP loan. Well, what do you do? First, I would recommend that you find out if the bank where you deposit your money is offering PPP loans. For a lot of small businesses, that's been a challenge from the start, and it's becoming more of a challenge because the PPP program went out of, actually expired on June 30th, but there was $130 billion or so left in the pool of money. So Congress passed emergency legislation that extended the program to August 8th. But a lot of the lenders that participated in the first and second round of funding have not reopened their lending portals at this time and don't have any plans to do so. So you need to be a little more, I guess, scientific, if you will, in finding lenders that have reopened their portal and are taking applications. And keep in mind that in almost every situation I'm aware of, the lenders, be they a local bank or a fintech lender, whoever, have set up an online portal. So you are going to have to go do an internet search and determine who's actually providing PPP loans. And we're going to talk about that in greater detail a little bit later. We have found in general that a lot of the online portals, the fintech lenders, have been more accommodating to small businesses than sticks and bricks banks have been. So keep an open mind when you're looking for a lender, that there are options that weren't available even when this program was set up a few months ago. We at the SBDC are constantly trying to update our list of lenders that have reopened their portals. Another thing to keep in mind is don't wait until August 7th to apply for a PPP loan, because what I'm seeing on the internet is even some of the fintech lenders are saying, if you want a PPP loan, you've got to apply by the end of July, early August. So don't wait till the last minute, because you could find this portal not open. Now, as I mentioned earlier, when you get your money, what will happen is the money will be deposited in whatever account you tell the lender you want the money deposited into. We again have recommended from the start that you somehow segregate that money either by a separate account or a separate accounting system to show to your lender at time of forgiveness that here's the deposit and here's how every dollar was spent, and it conforms to the 60-40 split, and was all used for eligible proceeds, use of funds. So if you don't have that set up front, do it as soon as possible, because it'll really make your forgiveness process a lot smoother. And another thing to keep in mind is you're going to have to prepare a certain amount of documentation, and you're going to need to continue to track those, use how the funds are spent to maximize forgiveness, because the forgiveness process is a totally separate application, but they ask for a lot of the same documentation. So you've got to really be on your toes, if it will be, to make sure that you conform to what your lender wants. And we can't stress too much that it's critical that you understand what your lender wants, because they're going to be the entity that decides initially how much of your loan is forgivable. They will then turn make a recommendation to the SBA that yes, this company has complied with all the requirements and should get full forgiveness. But if you can't convince or provide to your lender that you have all the documentation in order, then it could really slow down your and possibly damage your ability to get full forgiveness. Okay, the next slide. This is just general information on what you're going to need to provide. And I know the list seems kind of long, but we've kind of talked through all this. Keep in mind, these are government loan programs, and there's certain things they're going to want to see. The main thing, again, is going to be your 2019 taxes. Depending on how you file your business entity, that will be the determinant on what type of tax information you need to provide. Your quarterly 941s, hopefully you've kept good records of that. That's another important set of supporting documents. Same with state unemployment tax filings. Paying state unemployment insurance is an eligible expense, but you got to have proof that you've paid it. So all supporting information, anything that your bank wants. Keep in mind that each lender, financial institution may have its own set of rules that are on top of or in addition to those from the SBA. So you've got to play the rules by you got to follow their rules to make sure that you get maximum forgiveness. And also you've got to have some way to prove that you were in business on February 15th. Keep the payroll statements for this same period, 2/15/2020, so you could show to your lender that you have had employees on that date. You're gonna have to provide government issued ID like a driver's license. They're gonna want to have social security numbers, email addresses. Any structure other than a sole proprietorship, you're gonna have to have organizational documents. And again, any other documentation required by your lender. So those are just some pointers we wanted to share with you on what you can expect. I know it seems daunting, but Gary's firm is available to help. The SBDC network is available to help you pull this documentation together. We want to make this process work as smoothly as possible. So let's go to the next slide. I think, Gary, it's your turn.
Absolutely. So let's talk a little bit about some of the support. So Homegrown Childcare has engaged us to provide some support specifically for home-based providers. However, because I know some of you are centers, you're going to find that the same guides will work for you as well. So there's two things that I can suggest. One is there's a site that we list here, homegrownchildcare.org/PPP-resources. If you go to that page, you will be able to, one, see a webinar, both in English and Spanish, that recounts a lot of this same information. So if you want to review it in a different forum, and we talk through exactly what you need to do. There's also a step-by-step guide, both in English and Spanish. To some of the questions that we've seen in the chat box, That guide includes not only what do you do through each step, but also provides some suggested links from our firm that we found have been particularly good financial organizations for providers to work with and be able to get their application through. As you'll see in that step-by-step guide, we also suggest apply to more than one. You know, as Mike mentioned, there's a very different experience with them, so it's definitely a good thing to do. We also are providing email technical assistance. So if you email us at ppp@civstrat, CIVSTRAT.com, you can do that in English or Spanish, whichever language you're more comfortable with. We can answer your questions and would be happy to do so. Next slide. So some final points. One, you know, as you've heard throughout, as we've, you know, there's been a number of questions I've been answering on the side, this benefit is real. You know, when I talk about the PPP, I often hearken back to the old joke about the flood where, you know, flood waters are rising and a person's in his house, and so a boat comes by and to save him, and he says, no, 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 God's gonna save me. He goes to the roof, a helicopter comes, and he says, no, 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 God's gonna save me. And then he drowns. And when he goes to heaven, he says to God, why didn't you save me? And God said, I sent you a boat, I sent you a helicopter, right? This is your boat and helicopter. This is what we have right now. And so, you know, as you've heard, there are some steps to it. There is some effort involved, but this is a real benefit that is meant for you. If you are a sole proprietor, if you're an independent contractor, all the way up to, you know, some of the larger centers on this call, this program is meant for you. You are a business. This is your, you know, dare I say, right. The banks are going to have different requirements and vary in speed. And again, if you want to see some of those links, the link I provided on that step-by-step guide on the previous slide, that will provide you of some banks that you may want to hit that we found are a little bit faster in our experience, just speaking for our firm and our work with providers. And to be clear, we get nothing from it. We're not affiliated with a bank. We don't get a kickback from them or a percentage. Email TA is available, ppp@civstrat.com. Don't hesitate to email us with questions. You know, there are no stupid questions. I truly mean that. You know, this is a process that is, you know, as you have heard, does have some quirks to it. And so it is not any issue even if you have what appears to you to be a very simple question, don't hesitate to ask it. Next slide.
Yep, this again reinforces what Gary said. We're here as a resource for you all, both Gary's organization as well as ours. You can see the web address for the Virginia SBDC. And we try to funnel any questions, queries, etc., to the appropriate people within our network. I spend a lot of time every day communicating with center directors around the state, drilling down and trying to get specific answers for specific issues related to PPP and or EIDL funding. So we do have several questions. Somebody want to start asking these questions on our behalf so we can answer them for the group?
Sure, will do, Mike. And just, you know, really want to thank both Mike and Gary for bringing such important and detailed information and for your willingness to provide support and answer questions afterward. The small business development centers are here in the state to support and assist, and they have really bolstered their capacities and knowledge around the childcare industry and these grants. We're so appreciative of that. And then Gary, and we're so grateful to Homegrown for making Gary and his team and services available to the home-based providers in Virginia on their behalf. And so let's take a few minutes. I see that Gary has been able to answer a number of questions that have come across the bow, but I think it'll be helpful to review some of these in whole group. Appreciate the thanks from those of you. Also, just a few kind of ground setting rules. When they mention TA, they're referring to technical assistance and the ability to support and answer specific questions that each of you may have. Some have asked questions about whether if they've received an EIDL loan, are they also able to apply for the Paycheck Protection Plan? Mike, you want to take that question?
Sure. Yes, you can apply for both an EIDL and a PPP. A lot of businesses have done that. One of the quirks with the two programs is if you get an EIDL advance, I know it was capped at $10,000 and now there's no more money available for those advances, but whatever amount you've got or received on an EIDL advance will be subtracted from the amount of PPP forgiveness, which means that if you received $2,000 in an EIDL advance and then you file for PPP forgiveness, you will most likely end up with a $2,000 residual balance. I know that sounds weird, but the SBA has been made aware of this, and they state they are addressing it, but nothing has come out yet. So as the application now stands, your PPP forgiveness would be reduced by the amount of the EIDL advance you got, but you can still apply for both an EIDL loan and a PPP loan. The main thing you need to do or try to do is don't get both loans and use them at the same time for the same purpose. What I mean by that is the primary use of PPP funds is for payroll support. If you get an EIDL loan as well, it's been recommended by the SBA that you use the EIDL money for some purpose other than for payroll support. Or if you do use it for payroll support, you only do so after you spend all of your PPP money for that purpose. I know that sounds a little complicated, but that's the advice we've been given by the SBA, because otherwise it could, down the road, there could be a requirement that you use some of the PPP to pay down that portion of your EIDL loan. Again, just try to keep an eye on how you spend the money and when you spend it, and keep really good records.
Thank you. Next question, Mike, I'll also ask this to you. We thought that our PPP was to be spent by June 30th, 2020. Has the deadline been extended to 12/31/2020?
In one simple word, yes, but it's a little more complicated than that. Because the Flexibility Act, the PPP Flexibility Act, which went into law, became law on June 5th, extended the amount of time, the length of time you could spend PPP money from June 30th till the end of the calendar year, or the shorter of the calendar year, or 24 weeks after the funds are received. The challenge is that if you want to use it for longer than the original 8-week period of time, you've got to get your lenders buy-in to extend it for a longer period of time. And some banks are balking at allowing borrowers to extend it for a longer period of time. So yes, it has been extended, but you need to check with your bank to see if they will accommodate a longer payout cycle than originally intended.
Thank you. Gary, this individual already applied for the pandemic unemployment. They approved the application, but they have not been receiving any payment, even though they're doing their weekly claim. Her question, or his question, is, can they still apply for PPP?
So, this has been a really heated discussion nationally. So just to be clear, right, the guidance, if you're a W-2 employee, so if you have employees in your center, they cannot be on unemployment. The personal unemployment, which is, really geared towards the self-employed and sole proprietorships, has been an area that it's been interesting that the guidance from the SBA has not been consistent. The way our firm, and we have a lawyer on our team, has read the guidance is that you cannot be receiving money from PUA and using your PPP forgiveness at the same time. So I say this because, and I'm not trying to ignore the question, but just trying to give you the wider context, which I think is really important. So Kathy, to your question, or to the question that you've presented from our viewer today, if let's say he or she is not currently receiving personal unemployment, can they apply for the PPP? They can, yes. If they are currently getting unemployment and working the forgiveness part of that loan that Mike described during this presentation, that can't be done. So in other words, you would be getting money both from the federal government through the state of Virginia for that unemployment, and at the same time, you're drawing down stimulus funds for your business, which, going back to Mike's point at the top of the conversation, is about reducing unemployment.
Thank you, Gary. Mike, this one's for you. We're a religiously exempt organization that is a nonprofit. Can we bring all of our employees back and pay for them through the PPP loan, even though we're lacking students?
Yeah, you could do that. And that's one of the intended purposes of the PPP, is to bring back employees to pre-COVID levels. I think the challenge you're going to have, though, is how you balance bringing back the employees and not having any students. Whether or not it makes sense to do that in the long run, because again, you only have a limited amount of time to spend the PPP money. So I think you need to make a business decision now. From a policy perspective, yes, you would be eligible, but I think again, from a business continuation perspective, you need to kind of weigh for yourself whether or not it makes sense to do it.
Gotcha. And another similar one, and Gary, I think this is from a home-based provider. If someone was successful and got the PPP loan, and for a number of reasons, including low enrollment, health concerns, employment elsewhere, her employees did not return, what steps can she take for forgiveness?
Gotcha. So this is, see, I'm opening the door for a whole nother webinar. The forgiveness piece is a larger discussion, right, that we would want to have, because just as we've been talking today about how there's a set process for getting the PPP loan, getting forgiveness is also another process. I'm going to give you a simple answer, but I think it's worth looking at some of the resources that are out there on forgiveness much more closely. But the simple answer is, if you provide an offer to somebody to return, right? So you should be providing that in writing, and they should respond to you in writing, if at all possible. And that could be an email, right? But if they respond back and they are not going to return, they will not count against you as part of the rehire requirement within the PPP. In terms of not hiring back some of your people, that's where it gets a lot more complicated, right? If you say to me, gosh, Gary, I only hired back, half my staff, and, because we had lower enrollment, that gets into a much more nuanced conversation where we'd have to talk about some of the mechanics on forgiveness. And that would literally take us, another big chunk of webinar to do. So I'm not trying to entirely sidestep the question, but I don't want to give it short shrift either. So I hope that helps a bit. You're going to want to look at the forgiveness process very closely and the requirements of it.
Yeah, I agree with what Gary's saying. the SBA has created what they call safe harbors, which is a concept that's very old, but is somewhat difficult for people to wrap their heads around. But a safe harbor, in essence, says, okay, you've tried your best to do these things, but because of circumstances, you can't fulfill the original requirements. We're going to say, here's a pass. You get kind of a pass on some of these. And one of them is issues like this that Gary mentioned. The most recent safe harbor that was issued on the forgiveness side related to situations like you described, that your center was unable to reopen or has been impacted negatively by government mandates to shut down, health department requirements, anything like that, you could be able to get maximum forgiveness even though you don't quite meet the criteria because of this quote safe harbor. But I agree with Gary, the whole forgiveness process as it now stands, we could spend a couple of hours easily talking about just that topic because it's so muddy right now.
But terribly important.
Yeah, yes, very much so.
There are a few more questions that I'll ask about just what PPP covers, and then I want to shift a minute to a few questions about applying through banks through SBA. Does the PPP cover contractors, 1099s?
So the PPP does cover contractors in and of themselves, right? So if we remember back to the slide that I talked about, we talked about sole proprietorships and self-employed. If you are running, let's say, a home-based provider or a center, and let's say you have two 1099s and two W-2 employees. This is a real example that we experienced in New Jersey. The two W-2 employees can be included on your application. The two 1099s cannot. Now, if you're the 1099, you can apply for the PPP yourself using that 1099 income. So, and this is another real life example. We were working with a home-based provider. She was a sole proprietor. Her assistant was a 1099 contractor. We ended up helping both separately apply for the PPP, and they both got it separately.
So in that category, do you each want to weigh into the questions about what are the chances of actually getting accepted for this program? Mike, you want to go first?
That can be a challenging question to answer because optimistically, I'd like to say that if you get your documentation in order and you don't have any, there are some questions in the application that says if you answer these questions yes, then you're automatically declined. So let's say if you pass through all those and they're all no's, and you have the documentation you need, you should get the money. The challenge though is finding a lender that's receptive to first your application, and secondly is willing to work with you if there's any deficiencies in your application. The SBA has stated that lenders are required to help borrowers with their documentation if they have some shortfalls, but I've not seen any of that happening in reality because lenders are using online portals and the portal says yay or nay and they don't care. So if you follow the information, the guidance we've provided, and pull the documentation together and present it to your lender, you should receive it. But again, the lender is the key variable that no one has any control over.
Thank you, Mike. Gary, your thoughts?
So, I mean, I would say everything that Mike said plus, right? So Mike's dead on. If you have your ducks in a row, you can get this, right? What I would say is from our experience in New Jersey helping 93 plus providers, apply for and secure the PPP, plus beyond that, many more nationally through homegrown, people are getting it. Home-based providers are getting it, independent contractors are getting it, centers are getting it. even if you look at the numbers that were released last week of some of the largest PPPs, those over 150,000, you'll see a number of childcare providers that are on that list as well, right? So whether you're large or small, right? We had PPPs that were going up to $500,000. We had PPPs that were going down to $1,500. And these were people who actually applied and received it. What you do need to do is, as Mike said, get those documents together, right? If by now, knock on wood, you have your 2019 taxes in, it's the best place to go to so that way your data lines up. If you're a sole proprietor, go to your Schedule C line 31. I can tell you the exact line to look at on your form, right? That's your income. So, if you can get those together, that's more than half the battle. The other thing I would say, and this is coming just from myself and my firm and our experience, as I mentioned, if you go to the homegrown link that we shared, there's a step-by-step guide. In there, we have some links to some fintechs that we found that were particularly responsive. Our recommendation to the providers we worked with was to apply to at least 3 different ones. And it sounds onerous, but once you have your paperwork lined up, once you go through one of them, the other 2 are going to be not so bad, I promise, because you're going to say, wow, this is pretty similar. The reason why we do that is, as we've been talking about throughout, the banks have had all different experiences. And I wish I could say something like, this one always comes through or this one doesn't. It's really been much more of a random feel to it. I can tell you that the fintechs in our experience have been much faster and more responsive. And so if you're willing to apply to more than one bank and you're willing to get that paperwork together and can, I feel like there is a very high likelihood, because we saw many providers just like you get through the program.
Thank you. Super encouraging. I think that now I'd like to shift. There are a few more questions that we may circle back to, but there are many questions asking about, sort of where to go next. Where do you apply? How do you find a bank or a lender? Would you all like to give some, more practical next steps about, what do they do now?
Okay, Gary, you want to start with that one?
I'd be happy to.
Sure.
So, my recommendation, whether you're a home-based provider or a center, we've had a lot of positive feedback on the step-by-step guide that's on the Homegrown resource page. Go there, download the guide. If you're a home-based provider, you'll see it's written for you. If you're a center, everywhere it says home-based provider, replace it with center. It works the same way. We've had people outside the childcare field use it. So start with that. Look at the steps that you're going to need to take. The first step is you're going to want to pull the documentation together, and we have a list on there of the documents you need. There's also one that, Mike has shared through this presentation. So whether it's going through this recording or looking at that document, pull those documents together before you even sit in front of the computer to apply. And in terms of the next step, if you have a business account with a traditional bank, that is certainly one way to go. Again, just our experience was that they tended to be slow. And again, on that step-by-step guide is a list of financial technology, the fintechs, which we found to be much faster. And certainly if you do not have a business account, which is probably a fair number of you, the fintechs are the way to go, because the bricks and mortar banks will not talk to you without a business account on the PPP. So being very blunt, if you go to the fintechs, they don't care. They are trying to get people through the program. And so my suggestion would be A, paperwork, B, go to one of those links, apply to one, apply to another, apply to a third. Block out a period of time where you're just going to do it. Yeah.
I'm sorry, just where again can they find those links?
Those links are in the step-by-step guide. So if you go to the Homegrown Resources webpage, so if we go back one slide, if that's possible, Stephanie, you'll see there's a link that we embedded that will show you. Yep, there it is. homegrownchildcare.org, PPP-resources. If you hit that link, you're going to see there's some videos we have in English and Spanish. The step-by-step guide is in English and Spanish. And you can go right into that, and that'll have the links within it. Oh, look at that. Awesome. We're highlighting.
Nice. The yellow highlighter.
And I'm sorry,
I
Gary,
agree with Gary's advice.
one more question before you move on. We have a couple of folks who are asking, are there some of the recommended fintech lenders that would be perhaps more reliable or preferred over others?
Yeah, I mean, those will be on the list, but just to spew some out right now, Fundera, Fundera is one of them. Funding Circle is another. Cabbage with a K, so like the vegetable, but if you spelt it with a K. I know it sounds ridiculous, but Cabbage has been particularly good to our providers. Those are three right there that I would say right off the bat would be good. Lendio is another one. Lendio is another one to consider. So there you go, a few right off the bat. We used to say PayPal, but as Mike mentioned earlier, PayPal has not reopened since the second wave closed. So
Right.
that's not a good one, but Cabbage, Lendio, Funding Circle, Fundera, all good ones.
I think it's interesting to note that the fintechs have done a huge number of these loans, particularly on the smaller scale. But when this program opened, they were not even eligible to process PPP loans. They were not made eligible by the SBA as an industry until a couple of weeks into the program. So even though they got started late, they made up a lot of ground. And again, their technology platforms are much more robust than what most banks have generated. So I think, particularly for this program and the size of the loan, a lot of folks might be looking at that they probably overall are a better option to pursue than what you're going to find from most banks, even if you can find a bank that has reopened its portal. We have a very short list of banks in our market that have even reopened their portals.
And just to echo what Mike is saying, so you understand this, because it can sometimes be a bit confusing when you get into the process. A number of those fintechs, so in the case of, like, let's say Fundera, they are not actually going to be your bank. What they're doing is they're receiving your application and they're going to connect you with a bank that will actually give you the loan. The advantage of that is it means that it's not just about what Fundera is willing to do, but they're willing to hit a whole bunch of banks. And, for example, one of the things that Congress did was they did a set aside for community banks, some smaller banks. And that may be difficult for you to connect with because your local community bank may require a business account, or maybe you're just not connected to it. In the case of Fundera, they actually will, once they approve you, they connect you automatically with a bank, many times community banks. So you're able to get into that set aside without having to do it. So for example, we had one person who ended up actually getting their loan from a community bank 3 states away, right? But, even though that's kind of a weird connection, there it was, it got them through and they have their loan and they're on their way to forgiveness.
Right. And another thing about that is, Gary's right, there has been a set aside to what are called CDFIs, or community development financial institutions, and they're scattered around the country, and some of these facilitators will partner up with these CDFIs around the country. And as Gary pointed out, you may get your money from a lender several states away, or some lender you've never heard of, but they've been thoroughly vetted and they're using money that's been put together through this set-aside program for small businesses, particularly disadvantaged businesses that mainstream banks don't have access to.
Thank you. Y'all are turning through the questions here. Is there a set amount given, or is it based on each applicant?
It is, do you want me to answer that one?
Yeah, go ahead.
Yeah, sure. So it is based on 2.5 times your monthly income. And there's a few different periods, but typically you're using your 2019 annual income. So you take your 2019 annual income, divide it by 12, and then multiply that by 2.5. Now the question is, how do you determine that income? For those of you who are sole proprietors, for example, you're going to look at that Schedule C, line 31, which is your net profit on your Schedule C. That's what counts for your income. If, let's say, you're a nonprofit or an S corp, and everyone is on a W2 employee, you will take the information from those W2 employees. You will also take your state employment taxes, not your federal employment taxes, but state employment taxes. Those will also be figured into it. And so when you actually do the application process, most of the applications are pretty good about breaking some of this out. But it does vary based on the type of organization you are, and of course, how much income you did have in 2019. And to be clear, I know that can be frustrating sometimes because we've had people who have said, well, I just started in 2019, I didn't have much income. Unfortunately, that's largely the number they're using. You can do some other things with the 12-month period, but it's going, if you had a slow 2019, chances are that will impact your application.
Yep, I agree completely with that. So it's not everybody gets the same loan amount. It's based on income replacement for your staff primarily. So that's the focus of the program, and that's the math that you have to do to figure out how much you're eligible for.
Awesome. One of our listeners has written, I've applied 2 times and haven't received any information back. Gary, it looks like you provided a suggestion.
Yeah, I mean, I wish, because I'm a data person, right? I love data. And we've looked through everyone that we had contact with in New Jersey to try to figure out patterns to some of the funders, right? And we knew when people applied, we knew when people got their loans. There is no pattern to it. And I wish there was. And what we found was, for example, when PayPal was open, well, I'll give you an example of Cabbage, right? Because they're open. We have known people who would get funding from Cabbage within a couple of days, literally. And then we knew people who never heard back from Cabbage ever. So it's really kind of weird. There's no clear method to it. I've even talked with a couple of the fintechs directly to try to suss out, is there any way that we could, do certain things that would push our people up the chain? And there's really nothing, So if you haven't heard back from a couple of them, I would apply to more. And again, there's some of those links on that homegrown site. Take a look at some of those. If you haven't applied to them, throw an application in. You already have the material since you've done it twice. Sometimes it just takes one more, and I know it sounds crazy, but that's the way the system has been running.
Thank you. This listener has applied for PPP already and was approved, but to date, the portal says it's under process and does not let the individual sign the agreement. They've sent emails to the SBA, but have not received a reply about why they've not received.
So they should, okay, go ahead, Mike.
This is a PPP.
Yes.
They need to find out from their lender what's going on, because the lender is kind of in charge of that process. So they need to find out from whomever they applied with what the problem is.
Okay.
Because it sounds like there's a disconnect between the lender and the SBA, because keep in mind the approval process is kind of a two-step one. You go to whoever you are, either a local lender or a fintech, and provide that information. They approve it subject to receiving the guarantee from the SBA. There's this antiquated system called E-Tran that every lender in the country has to use to submit requests to the SBA for approval. And sometimes a lender will input information and it just disappears in E-Tran, but it's got to be the lender that kind of ferrets it out and figures out why certain things haven't happened, because it's supposed to be very quick, and if it's not working right, it's up to the lender to figure it out.
After applying to several banks, what if I get a yes from more than one?
If you get a yes from more than one, it would likely be a miracle. So the way the E-Trans system that Mike was just mentioning, so what happens is when your application finally makes it to the top and the bank puts you in the E-Trans system, whether you've used your social security number because you're a sole proprietor or self-employed, or you use your federal employer ID because you're a corporation or nonprofit, once that's in there, the system says nobody else could get one. So once Kathy Glazer puts in, her social security number, nobody else can put that in and get approval. I've only heard about one case nationally where that has happened. And I was interrogating the person. I was 2 steps away from the story. And I interrogated the person because I was trying to figure out how that could even happen. And they didn't have all the data. So I'm not even sure if that was a real case. What I have heard the SBA in New England say is that because that did come up on a webinar with the SBA here regionally, they said if that were to happen, all you would need to do is give back the money on one of the PPPs immediately. But again, I have not heard of it, and I know a lot of PPPs that were processed around the same time, and so people would get an email very quickly from, if Cabbage got them, Fundera would send an email saying, we see that you're now in the E-Trans system, so you're no longer eligible for us.
Great. I am going to ask you all one final question. Would you just give some response now about what's the outer boundary, remind them of the application date, the deadline for applying, and then the period of time that the loan or grant would be good for?
Okay, deadline, the extended deadline is August 8th. I've read some sources saying it's until August 8th. I've read others that say through August 8th. But in any case, don't wait until August 7th to apply. Prior to the June 30th cutoff before, most, if not all lenders shut down their portal a couple of days before the end of the program because they knew they couldn't process them in less than 2 days. So I would highly recommend if somebody's pursuing it to do so on or before the 1st of August.
So now's the time to do it.
Oh yeah.
Okay. And then that would be the time for use of it would extend through December.
Right, it'd be the earlier of 24 weeks or December 31st. So in this case, it'd be the end of the year.
All right. I think unbelievably, you two have answered almost all of the questions that came forward and did so carefully and thoughtfully. I want to also read that First Lady was not able to unmute the audio from the device that she was using, but she did send me an email and said, please tell the providers how grateful we are to them for helping the children and families when we need them the most. They hold the future in their hands, and we are working to get them real help. I look forward to seeing them again when we can visit safely. So best wishes to all of you from Virginia's First Lady. And I do want to thank Gary and Mike again for amazing resources that you've brought forward to the small business development centers, to Civitas, to to Gary's organization and to Homegrown for wonderful support that we're able to provide. And thanks to the folks who were on the line today. It's a lot of time, especially when you are also caring for children. So thank you for making the time, and we hope that the information will serve you well as you apply and hopefully get some of these much needed financial resources. Thanks again to everyone. Stephanie, also thank you to you for operating our webinar today, and hope everybody has a great afternoon.